Japan's central bank is tweaking interest rate policy and asset purchases in the battle against persistently low consumer prices. At the same time, the bank doesn't want to be seen as stepping back from stimulus measures. The Bank of Japan is allowing bond yields to move in a wider range than expected. It's also dropped its target of 6 trillion yen, or about $55 billion of annual purchases of exchange-traded funds. The decisions appear to signal that the BOJ remains willing to step into the market, but only when necessary. On borrowing costs, the bank has kept short-term and long-term interest rates unchanged, as inflation has yet to reach the 2% target. Unlike many central banks, the BOJ has been trying to end deflation for years. In a move seen to support banks' profitability, the BOJ will let long-term rates float up or down by 25 basis points around the target instead of 20. Low interest rates are not good for the bank's bottom line. The decisions follow a 3-month comprehensive review of the BOJ's monetary policy framework, its first since 2016. One economist says there aren't many options open to the central bank.
Well, realistically, I think they're really running out of cards to play with. The fact of the matter is the whole world is under race to halt interest rates from going up. And Japan have been doing this for actually 2 decades. And basically, they will continue to do so, especially with the pressure that the whole world, especially advanced economy, is virtually forced to do this. There are some methodology changes and some minor changes, which you've depicted. But I think all in all, the direction is very, very clear. And that is basically to halt further rise of long-term rates from actually happening. I think what we're seeing is further disparity of wealth, which is always the ignition point for very negative, moves by the public to basically, throw away their trust to the government. Of course, we're far from that position right now. But because it's COVID-19, it's becoming very clear that there are further disparity of wealth that is appearing, which certainly would be difficult for Bank of Japan to sustain, such policy, which would enable those who have, for example, like assets of real estate and, stock market to get even richer, whereas an ordinary person on the street would not benefit from this situation.